Guys, welcome again to Grace Life in the UK. Good morning, good afternoon, good evening, wherever you are, whatever time you're watching this. Thank you very much, and I hope you subscribe, comment down below, and like and share, obviously. So yeah, all those sort of things. We want those to get away. Okay. Oh, by the way, guys, thank you for the 100+ people who watch my channel. Probably not 100 people, probably just some of you like rewatching it. But yeah, thank you still. I appreciate the support, and I hope that we can continue on and support each other. Like, I've started this channel to basically create a community where we can all be aware of how to take advantage of the market, and then you and I can trade like ideas, like chart wise, how do you see the market, how I see it, and then we can collab with each other. Like, that's not a problem. Like, it actually helps me, because if I not seeing the way you're seeing it, then it will, I will start to question what I'm doing, and basically it will help me a lot in improving my strategy as well. So yeah, I think last week I ended up with DXY where it is going, and so the monthly time frame, it looks like this. There you go. Typical price action, liquidity imbalance. These are the three core foundation of my strategy. So basically, if we can all practice this, I think we can position ourselves into taking advantage of the market. So yeah, 10 o'clock. I think it's already past 10, so market should be open. If we look at the 1 hour and see where DXY opened, and there you go. Not much movement on the DXY, although probably the other pairs, the likes of, oh, there you go, AU and GU are quite up there. Oh, that's very high, bro. Okay, don't worry, we'll try and make them, we'll make sense of things as we move along with this video. Very quickly, how do I enter my trades? So if I go back to monthly, hope you can see this. Before I start, I would like to see the news first. So Monday, not much going on. Tuesday, there you go, not much going on. Oh, Wednesday, I think Wednesday is the most volatile, and Thursday, yes, Thursday. So Wednesday, Thursday would probably be the best day to enter the trade, although I'm not saying you don't enter Monday, Tuesday, and Friday. Like, it's up to you. It's your decision and your choice. Buyers and sellers in the market. Obviously, Euro USD is still a lot of sellers. I'll refresh this just so we can see any changes. Yeah, it's still the same from the last week. Euro USD, a lot of sellers. GBP USD, 50-50. CAD JPY, a lot of sellers. Same with Euro GBP NZD. USD Swiss franc, I just started trading it, but yeah, there are a lot of buyers at the moment. So if I go now to the chart very quickly, if we pick up where I left off, and we try to predict that DXY might go up. So two tendencies obviously in the market, it's just up and down anyway, but we wanted to know if last week it would break this current structure, that it's where it is reacting to. So basically there's a break of structure here. It came all the way down, the top or the head of this candle, like this black candle, and it reversed, so it reacted to it. So we know that there's something going on. That's all we needed to know there. If we go down now to the lower time frame, so I've already highlighted this section. So this is kind of like the swing from this lowest point to this highest point, and basically we want to know whether the market will continually go up or just a retracement from this area and go down. So another two tendencies, sorry about that. Daily, still not clear enough to me. That is not a clear indication that the market's going to go up. I would like to see them break this previous high. which is this area. If they break that, then I would say the structure or the market is now uptrending. But for now, it probably will just retest. When I say retest, what do I mean by that? So basically, if this is the area that made the move, so let's just highlight this candle. There you go. So I call this an institutional candle because I'm trying to tell myself that this is where the bank went in and pushed the market down. So very clearly, structure break, never created a higher high. Instead, it created a lower low, like definitely lower low. So now you want to see the market, how it reacts to that area. Okay, we use this Fibonacci, there you go. Fibonacci, doesn't matter. You don't know what Fibonacci actually means. There's a lot of videos about it. So it's trying to say or tell us that 61% is kind of like the perfect number of ratio and proportion in terms of everything that is in this world created by the Almighty. So yeah. Yay. Okay. So what I would like to see now that the market will do is basically go up to this area. Let's delete that. So basically, if they're gonna uptrend, let's say from the 4-hour definitely is uptrending. So they never created a lower low than this two and basically retest that. And then now they're struggling to go down. They're definitely going up, as you can see there. So we're not entirely sure yet. We don't know yet. But if they go up, we want to see if they react to these areas. So potential areas that I would like them to see to react with first and foremost is this area because of that candle. If they get to 61% and never go up higher, struggle, or they're struggling and go down, then that means the market is still intact and it is downtrend. But if they break this area and start to break this previous high as well, so that's the first high, second high, third high, they break all those three, then that means the market will gonna go up. So we'll definitely watch that. How do I enter the market in terms of my trades, whether I'm buying or selling? Let's quickly go to GBP USD. So in here I have previous trades, so I would say this one, and then we are actually in this trade as well, from here to there. We'll do this first. Actually, this is better because it was a very good buy. So we go to 4-hour. Let's delete that. So there you go. Highlight this imbalance. So again, imbalance is any gap between three candles where the wick do not touch. So institutional imbalance, there you go. Okay, so from the daily, we know that the structure happened here. Never created a lower low than this area, but instead it created higher high, kind of like a double top, but then it created another like uptrend, like where it created higher high, lower low, higher high, and then it started to go down. The reason for that like retracement to go down is because of this area. So I think the market entered here, or the banks entered here and started to push it up. And what the bank normally does, as I said, is they would close their trades and then go up again, or like, you know, close their trades whether they're uptrend or downtrend. You know what I mean? Vice versa. They can close it to go down, or they can close it to continually go up. It doesn't really matter, but you know what I mean. And so yeah, that whole structure is intact, and I would normally highlight this whole area that way, from the lowest point to the highest point, and call it a swing. Let's delete this previous swing. There you go. So we're trying to wait for the market to retest that whole move from here to the highest point, and basically it actually did. So to clearly show you that, there you go. So this is where the market went up, but we know that they want to retest that area, and so there's an imbalance here. So I would normally wait for that to get filled. Once it get filled, because it's now on my 88% retracement, Fibonacci retracement, I would enter on that area. So whether you enter here or there, it doesn't really matter. What matters is we know that once they fill this in, the market will go. And it did. Look at that. If you have entered on a buy from this area, now the market is here. That is 200 pips. Just imagine that. 200 pips on a 1 lot size, that's 1,600. On a 0.1, 162. And then 0.01, obviously. 0.01. Oh, sorry. 0.01. 16 pounds. So you know how it is. Different lot sizes depending on your capital. So I would suggest you only trade 1% below. So 0.05% of your total capital would be the best, so that you're not stressing out on your losses. And at the same time, when you profit, you're in a much better position, because you're earning 3 times of what you're putting in, probably more, and you're just losing below 1% every single time. So yeah, 1%, I would normally say 35 pips is the best stop loss if you're trading a swing or 4-hour and a daily candle. So 35 pounds in 0.01 is only 2 pounds. If it's 0.1, it's 28 pounds. And then obviously if it's a 1 lot size, it's 283. So probably not the best idea to trade 1 lot size. Stick on 0.1 and 0.01. There you go. Any questions, guys? Our video today is just very quickly. The market has already opened as well. And so our strategy is founded on break of structure, Fibonacci retracement, look for any imbalance in the market, liquidity, just so you know that that's where they want to go, whether it's a take profit or for an entry. So always remember those 5 things: break of structure, Fibonacci, 61%, wait for 61, and then look for imbalances and liquidity. Once you have all those, you should feel comfortable with your trade. So yeah. Anyway, guys, thank you for watching. If you have any questions, please let me know. Add me or follow me on Instagram, add me on Facebook, and then yeah, just personally converse with me about charts or trading. I'm very open. I want to help as much as you will probably be able to help me. I want to help you guys, and we can all grow together. Okay? Peace.